All of you are very interested to know the result of your actions, whatever it may be, results of an action periodically, isn't it? In your school also, you need to get what is your result by every year once and then, now and then. So we have quarterly test exams and half yearly and pre-final and final exams like, and mark is the deciding factor to know your performances. Similarly, whenever we do the business, we need to know what is the profitability. The ultimate intention of running the business is to make the profit. As our intention is to make the profit, are we really making the profit or not? This question will be addressed by preparing the final accounts here. See, in accounting cycle, we usually start with the cash business transaction, or the transactions can be measurable in terms of cash or money, as well as related to the business will be recorded systematically as a journal entry. That's the first step. That is the first step. And the next step will be preparation of ledger. Usually will be done once in every year or periodically once in every month like. Ledger is nothing but classification of accounts. So we have n number of transactions and involving n number of accounts: rent account, electricity account, salary account, advertisement account, assets account, liabilities account, capital account. But I want to know how much rent I have paid for a period of accounts I am supposed to prepare. So usually, if you are being the student, we prepare our report cards once in every year, and we get promoted to the next standard once we clear the first examination, so first class examination. And usually it will be a period of 1 year or 12 months, and starts from June and ends on March or again June to June. That is called academic year. That is called academic year. Similarly, for knowing the profits and losses, we have financial year. Starts with 1st April and ends with 31st March. And we, of course, have the calendar year also. As per the calendar year, starts on 1st January and ends on 31st March. And Tamil New Year and Telugu New Year and Urdu New Year. So many New Years we have, we never mind that. And the year for which we want to know what is the status because of the business operation. For all the business people, they are interested to know what is the profitability, what is the position of their assets and liabilities. These two will be the main criteria for them. Is it clear? For that, of course, they need to prepare a statement which is called final accounts here. So rent, in a year we make a payment of rent once in every month. For a 12 months period, how much rent I have paid can be grouped in a rent account which is called ledger. We have already studied that one also. From the ledger we are going to prepare trial balance. Trial balance is nothing but a first level of verification whether we have done any errors. The trial balance is a summary of all accounts having debit and credit items. The total of the debit should be equal to the credit side. Will assure you there will not be any arithmetical errors, but it will not guarantee that there is no any error. Of course, though the tallying for balancing of the trial balance exists, still there may be errors. There may be errors. Anyhow, as the name says, trial balance, for the first level of verification, we are preparing the trial balance and confirming that at least some errors not available here. After preparing the final trial balance, the ultimate goal to know what is the status of our assets and liabilities, what we own because of running the business, what we go to the third party. Okay, that will be a statement of balance sheet. As well as because of running, how much a gain will be prepared as a profit and loss statement or profit and loss account here. These things put together will be named as final account. So in this lecture, I am briefing the final accounts here. Of course, in my lecture, I will go in detail of all these concepts, right? It's not a joke, like I will go in detail of all the concepts. I will guide you to pass the journal entry for each and every aspects. Each and every aspects. Listen to the lectures carefully. Watch again and again for the further clarifications. If you have any doubts, right? The final accounts will be having three main block or two main blocks, like two main blocks. One is income statement or income statement, means trading and profit and loss account. Income statement. This statement will help us to know what is the profit or loss because of 1 year's operation. The second part is balance sheet. Okay, financial statement, balance sheet. Balance sheet is nothing but what I own because of the operation, and what I own, what I, in this case, I relates to the business. Okay, as a business, if you are being an accountant for an organization, you are working for the organization, not for the owner. You are not employee for the owner, you are employee for the organization. So you need to see the organization's perspective, what the organization wants and what the organization owes. Okay, if the organization owes to the owner, also a part of owing for the organization, usually named as capital. Usually named as capital. Then what the organization owes and owns is presented as a statement which is called balance sheet. Which is called balance sheet. Is it clear? And of course, this income statement, the income statement, again we have two blocks. One is trading account, another one is profit and loss. Trading account, trading account. Isn't it? I don't call the balance sheet as balance sheet account, but income statement usually we call that as trading account. The second part of the income statement is profit and loss account. Profit and loss account. Is it clear? I hope so you could understand the difference between these two. So income statement, trading account and profit and loss account. Trading account and profit and loss account. But balance sheet is not an account. It's a statement. It is a statement. The balance sheet becomes the opening journal entry for the next year, and it go on year after year. Opening journal entry, like, okay, we have passed the opening journal entry also in the previous classes, so you don't have any confusions in that. And every year end, what we do know, after the preparation of this particular final accounts, the income statement will be simply removed. Income statement will be simply removed. Only the balance sheet will be the starting point for the next period. So what you do, you can link this with your school studies, right? So if you are studying +1, after the end of +1, you will get the pass certification. That is more than enough. Whatever the test mark you score in midterm or slip test or class test or half-yearly is not at all a matter. The final mark sheet will be enough for moving to the 11th standard. And once you complete 12th standard, the 12th mark sheet is more than enough. So 10th mark sheet and 12th mark sheet. Now, sometimes 11th mark sheet. Now, most probably 11th mark sheet is consolidated with the 12th mark sheet. So when you complete the undergraduation mark sheet. When you go for the interview, wherever, they won't ask you what is your test mark in your 5th standard first sem or first slip test. Of course, it's not at all useful at all. No, not at all useful. But of course, 10th mark and +2 mark, undergraduation, any professional exams, and all these things, of course, are very, very important. Similarly, for the 1 year's your hard work being the student of a particular class is determined by seeing the means your progress report by the year end or mark sheet. Right? Very simple. The same happens here. 1 year's organization's operation will be easily seen by referring the balance sheet. Then what about the income? What is the result of the organization's 1 year work? Is it really worth or not? Pass or fail? So pass or fail will be determined based on the mark you score. The same happens here also. Pass or fail. Similarly, businesses making profit or loss is determined by preparing the income statement. The income statement is of two items. One is trading and profit and loss account. Before I go for the trading and P&L account, let me now come here. So here in question number 1, In question number 1, we have been given the trial balance. You are aware about the way of preparing the trial balance. The way of preparation of the trial balance is very simple. You can simply prepare the trial balance, right? So how can you prepare the trial balance? So you could have passed the journal entry and prepared the ledger, and the trial balance is prepared. So in the previous classes we have learned up to the preparation of the trial balance. In this class, my teaching is all about how to prepare the final accounts from the trial balance. So here trial balance is given. So let me now decide on what this particular element is, balance sheet, what we own and what we owe. What we own is nothing but assets, right? I mean the organization, what the organization own. I don't mean the owner independently. What the organization owns, only assets, what sort of the assets we'll now discuss. And what the organization owes means liable to pay to the third party, outsider and insider. Who is called insider? The owner is the insider. The organization is liable to owner because the organization is the newborn baby or born baby for the owner himself. So the organization should give him something. Whatever the money put in by the organization means owner will be returned by the organization to them, or the organization is liable for the owner, which is called capital. If the organization is liable to the third party, then it is called cap liability. So anything payable to the third party is called liability. Anything payable to the owner is called capital, right? And what the items possessed by the organization is called the assets. Clear? I hope so you could not understand. Preparing in a systematic manner, this one is called balance sheet. So when the organization is closed, the assets sold, and with the realization, it is going to be used for the owner as well as for the outsider settlement. So this is how it is going to be settled. Is it clear? I hope so you could understand the part. Now, what the organization most probably, this will be assets. Assets will be always a real account or sometimes personal account. And similarly, most probably capital and liabilities maybe, okay, 1 second. Most probably the liabilities and capital may be in the nature of personal account. Okay, in the case of capital and liabilities, the form of real account is very, very lesser. So now in trial balance, you have to find out the real and personal accounts first of all. Those items will go to the balance sheet. Come on, tell me. Purchases. What is the account? What is the account? Yes, what is the nature of account? Purchases. Come on. Yes, purchases is a nominal account or sometimes real account, but predominantly we can assume in this case as nominal. Carriage inward. Come on, tell me. What sort of account is this? Message me carriage inwards are simply carriage and hyphen n. Okay. Simply if you are posting me or texting me as a nominal account will be confusing me whether your answer is for purchase or admin expenses or fixed assets. I don't know. So while posting nominal, you mention the item and then put the nominal or n. So carriage inward is nominal. Admin, come on. I need the answer. Participation from you all. Come on. Admin expenses, make it faster. Yes. Nominal account. Selling expenses. Very good, nominal. Answer not from 1 or 2. I need to get the answer from you all. Come on, fixed assets, make it faster. Fixed assets, real, very good, real. And 12% investment. Okay, 12% investment. See, mention me investment and then post it as real, right? Okay, real. Then what about the debtors? Come on, make it faster. Debtors. Yeah, debtors is personal account. Amount payable to the means amount recoverable from third party, or he owes to us, or we own the amount recoverable from him. Cash, real account. And opening stock. Opening stock. Opening stock. Okay. Opening stock. I'll keep it pending. I'll keep it pending. Now sales. Come on, get me the value for sales. Make it faster. Yes. Sales. Sales. Nominal account. Capital. Personal account. Okay. Personal account. 10% loan. 10% loan. 10% loan. Personal account. Okay. 10% loan is personal account. Lender's name will come. Lender's name will come. And creditors also personal account. Most probably in the credit side, you have liabilities, capital. Liabilities and capital. And these two most probably personal account, and then you have income. Income is a nominal. Okay. Similarly, in the debit side, what are the items will be there? We have assets predominantly. The assets could be either real account or personal account. Apart from that, we have expenses. The expenses is usually nominal. Is it okay? Usually nominal. Now, the easiest one is to find out what the company owns and what the company owes. Come on. I'll write the owings in the left hand side and what they own in the right hand side. Right? So, what the company, the assets, no, all the assets held by the company. So, this will be coming under owning side. And these things the company has to pay or the organization has to pay, so this will be coming under owing side. Is it okay? So what will not come? This will not come in financial statement or balance sheet. In balance sheet, these items will not come. You should have clarity. I need to find out what the company owes as well as what the company owns first of all. With this small idea, I am going to post it here. What the company owns. These are the 4 items are owned by the company. The owning will be in simple sense or in accountancy terminology, we can call that assets. These are assets, right? Similarly, in the liability side, these 3 items, okay, what the company owes or the organization owes to the others will be the liability in accounting term. Is it okay? I hope so. You could not understand. Is there any doubts? You can post me then. So, owing is nothing but liabilities. Owning is nothing but assets. And the list is already given. These are liabilities. What are they? We have capital. Capital being 5,000 rupees. And we have 10% loan. We have 10% loan being 4,000 rupees, and we have creditors being 1,000. Okay, creditors being 1,000. So I have recorded all these items, so I can simply score out that. Similarly, these are the owning values or items or assets. I am going to post those things in the asset side one by one here. So I have fixed asset. I have fixed assets. Okay. So the fixed assets being 4,000 rupees, and then I have 12% investment. 12% investment value being 2000. Okay, 2000. 12% investment 2000 rupees. Debtors 1000. Debtors 1000 rupees. Apart from that, we have cash balance being 1000 rupees. Is it clear? So these items recorded. Sir, what about the items we have posted that as a nominal? So nominal is the result. Is the result. The difference between the nominal items of the debit and credit side is equal to the profits and losses. Your years, your hard work in your school gives you a certification to get promoted to the next standard. Same happens here also. Your year's organization's performance is found out by comparing the credit and debit side values of the nominal accounts only. Is it okay? Now, come on. Without considering the stock case here, I'm going to find out the difference, right? Come on, try to find out the difference here. Yes, here sales is in the credit side. And what are the items are in the debit side? Come on. So these are the items are the expenses. These are the items. Nominal account in the debit side is always be an expenses. So these are income. And nominal account in the credit side is always the income. Now the difference between these two is the result. This will be the income result. Is it okay? Clear? Okay. I will get back to the stocks. I am going to deal that separately. Now in simple sense, 5000 is the purchases and 1000 carriage inward, admin expenses 1000 and selling and distribution expenses 1000. So the overall 8000 rupees and sales is 7000 rupees. If you directly compare this, will you be losing or gaining? Come on, tell me. Are you losing or gaining? Make it faster. Are you losing or gaining? Come on, get me the value. Are you losing or gaining? Yes, text me. Okay. Once again. Yes, text me once again. Are you losing or gaining? Yeah, your chat got erased. Okay, losing. Now come on. I purchased material for 5000 rupees. I purchased material for 5000 rupees. Okay. I purchased material for 5000 rupees. Come on. What is the expenses here? What is the expenses here? Come on, tell me. Come on, tell me. I purchased material for 5000 rupees. Is it expenses? Come on, tell me. Yes. I need the answer from you all, not one or two. Make it faster. Yeah. Yes. How can you say the purchases being expenses? And the month end, I have 2000 rupees worth of stock unused. Come on, tell me what is the expenses? Come on, tell me. Is it 5000 expenses? Is the 5000 expenses or not? So I purchased for 5000 rupees by the month end or period end. By verification, I came to know 2000 rupees worth of stock still is with us. You have 5000 rupees in your purse. You went for a picnic. And after returning from there, you found that you have 2000 rupees in your purse. Come on, tell me. How much is your expenses? Yes? Yes, come on, tell me. How much is your expenses? Yes. You have 5,000 rupees. Yes, very good. Now tell me, already you have 1,000 rupees in your purse. You got 5,000 rupees from your parents. You went for the picnic. After returning from the picnic, you found that you have 3,000 rupees in your purse. What is your expenses? You already have 1,000 rupees in your purse. You got another 5,000 rupees from your parents. 1,000 is already available in your purse. And you got 5,000 rupees from your parents. And after returning from the picnic, you verified that you still have 3,000 rupees in your purse. Now, what is the expenses here? Yeah, naturally it's 3,000. 1,000 rupees is in your purse and you got 5,000 rupees from your parents, and what 3,000 rupees is still available means that should be subtracted. So the balance 3,000 is the expenses. Am I right? Come on, come on, tell me. The 5,000 rupees you received from your parents, can I consider that being expenses or not? The 5,000 rupees you received from your parents, can I consider that being an expenses or not? Come on. Is it an expenses or not? Make it faster. Yes. Okay, so it's a nice example. Liabilities are okay. You have to repay to your parents. Very good. The same happens here also. Most of the times it's not an expense or income. And now, the purchases is not the expenses, so it's not nominal account also as per that assumption. Only to the extent of money used will be the expenses. So you have 1,000 rupees in your purse, you got 5,000 rupees from your parents, overall 6,000 rupees, and after the picnic you came to know you still have 3,000 rupees in your purse. Now tell me, what about the 3,000? What about the 3,000? Come on, tell me. What about the 3,000 rupees? Is it an expenses or liability or an asset? Come on, tell me. Or income? What about this 3,000? The amount available in your purse. Is it expenses or income? Choose the best answer, right? Such a way. Expenses or income or asset or liability? Come on, tell me. What about this? The amount you have in your purse, the amount you have in your purse unspent. If it is not spent, how it is being then expenses? Come on, tell me. The amount is in your pocket is an asset, can be spent later. Yeah, so this is an asset. So this is an asset, not expenses, not income, not liabilities. Not liability, this is an asset. Then what is expenses? To the extent of amount spent is, to the extent of cash spent for the picnic is the expenses. To the extent of amount not spent and kept in your purse is nothing but your asset. The same happens here. This opening stock is nothing but the amount already available in your purse. And then the purchases is nothing but the amount you received from your parents in this year. So 1 plus 5. And in adjustments, there is a closing stock of rupees 3,000. What does it mean? After the year end, you came to know 3,000 rupees available in your purse. That should be subtracted. After doing this, the balance amount, that 1 plus 5 minus 3 is the expenses. So purchases is not the expenses, only the consumption is the expenses. Is it okay? And to the extent of cash unspent is the asset also. Such a way you can now handle this. Now let's see here. I'm going to prepare the income and expenditure statement. Otherwise, I name this as trading and profit and loss account. Profit and loss account. In trading and profit and loss account, the left hand side is called as debit and the right hand side is called as credit. The debit side is meant for recording all the expenses. Credit side is meant for recording all the income. Okay. I think so. Now you are able to listen my voice properly. Now let me start here. Okay. I am going to keep only these items. Okay. Rest I am going to erase. Clear. So too much of lines will confuse you, so I erase all the unwanted lines. Now listen. Okay. Okay, now listen. Now, now what is the income here? Sales is the income I am going to record in which side? Credit side. Credit means credit side only. So I am going to record that in the credit side. So sales. I hope so you don't have any confusions here. Sales being 7,000. And in the debit side, I should not write the purchases. I should write what? Consumption of raw material. Raw material consumption. Is it okay? The raw material consumption is nothing but 3,000 rupees. Opening stock plus purchases minus closing stock. The raw material consumption is the expenses. And what about the 3,000 are not consumed item? That not consumed item is an asset. We'll go to the asset side of the financial reports. I'm going to record here. Stock. Stock, closing stock or stock at the year end. How much is that? 3,000 rupees. I can enjoy this in the next year. If you still have 3,000 rupees unspent in your purse, you're pretty happy, right? The same happens here also. I am going to keep this 3,000 rupees as it is. Now, so I have posted the sales. I have posted adjusted purchases. 5,000 rupees is usually called as purchases. 3,000 rupees is usually called that as adjusted purchases. And the rest of the three are usually in expenses only. So I'm going to write here carriage in 1,000 and admin expenses being 1,000 and selling expenses being 1,000, right? I just completed posting that. Do you have any confusions in classification of this item as trading and P&L account? So in trading and P&L account, what are the things that are going to be recorded? Only the nominal accounts. Only the nominal accounts means those items having no future impact will be recorded. And then the second block I'm going to record here is the financial position. Usually I name this as balance sheet. In balance sheet, left hand side is usually named as liabilities, mean that the organization owes to either third party or the owner. If the organization owes to the third party, then it is called liability. If the organization owes to the owner, then it is called capital. And in the right hand side, we have the assets, what the company owns, what the company owns in the case of emergency. In the case of emergency, they can finish off selling all these assets, an amount recovered, and using that amount, the liability will be paid off. Is it okay? This is the logic behind. I think so. You don't have any confusions of posting up to now. Do you have any confusion? If you have any confusions, you can ask for the clarification. Now, come on, tell me. Credit side is the income. In trading and P&L account is we have 7,000 rupees in the credit side and almost 6,000 in the credit debit side. What does it mean? Credit side is excess, otherwise income side is excess. If the income side is excess, is the company making profit or loss? Come on, make it faster. If the company making any profit or loss, how much is that? Make it faster. Okay. Okay, good. I need the answer from you all. Make it faster. Yeah. So the company makes a profit of rupees 1,000. It's very nice to hear you all. Right. Now come on, tell me. That 1,000 rupees profit is for whom? That 1,000 rupees profit is for whom? Yeah, come on, tell me. It's for the lender. Come on. Is it for the lender? Okay. It's for company only. Company is now run by whom? Company is run by whom? Owner. Company is run by owner. So I tally this. This is nothing but just similar to the ledger. I'm going to tally this. If I tally this, the value will be 7,000 and 7,000 rupees. This value is named as net profit. If the value comes in the opposite side, then it's called loss. Now this money is meant for the owner. Organization worked and earned this money. This money will be now payable to whom? This money will be payable by the organization to the owner. Payable by the organization to the owner. Is it clear? payable by organization to the owner. And in balance sheet, this is nothing but amount payable by the organization to the owner. Yes or no? So, before this particular financial report or this particular financial report preparation, we came to know that the organization has to pay 5,000 to the owner. By 1 year's operation, the organization made a nice profit of 1,000 rupees. Whatever the profit made, it is also meant only for the owner, so it should be addable with the owner's money. So, add net profit. So, the ultimate aim of the owner is nothing but he invests the money, taking the risk of losing his capital amount invested. Apart from that, so much of sweating and toiling in a day to make the company work properly. Okay, you might have seen that movie, Surarai Potru. How many of you seen that movie, Surarai Potru? It's a Deccan Air Deccan, right? It's a story about Gopinath. Okay, good. Some of you seen. So much of pain has taken. Once he collapsed the business, his life is in question mark, right? Such a tension was there, and for the tension, this 1,000 rupees is for him. So it's now added to order. Now come on, tally the balance sheet. Tally the balance sheet. Find out if there is any balance available. Yes, make it faster. Tally the balance sheet and get me the value. Okay. Yes. Is it tallying? So now the organization should pay to the owner 6,000 rupees. 11,000 rupees is the total, I think. So now the balance sheet is tallying here. That's all. The organization owns 11,000 rupees as well as owes 11,000 rupees. Out of the total owing of 11,000 rupees, 6,000 is meant for the owner, balance 5,000 is meant for the third party. Okay, this is called financial report. This is called financial report, and these are nothing but midterm test and half yearly, quarterly, pre-test, slip test, model test, whatever it may be. This is the final exam. Like the final examination mark sheet will speak up to your life. Is there no? Every year later, we just cancel this and throw it off. We will keep this as a record, and this is the base to know where our business is. For that only, we are going to start the balance sheet. Now, listen. I'm going to make slight changes. With that, the topic will be completely over. In trading and P&L account, it is not a single account. It's a two account. Trading and P&L account is not a single account. It's a two account, right? Trading and profit and loss account. Otherwise, trading account is a separate one and profit and loss account is also separate one. Is it okay? As these two are separate account, now we need to know to what extent the items will come in trading and to what extent will come in the P&L. Right. So when you are purchasing the material and bringing the material to your place and doing some process and making to fit for saleable up to the point, right, will be coming under the first block called trading account, right? So you see if you are purchasing a raw material, otherwise you are running a furniture mart. Okay. You are purchasing the furniture from the seller. It is your showroom. Right. And the furniture should come and kept in the showroom. Up to this point, the expenses will come in the trading account. This will come in the trading. Okay. Means material cost and wages if any, and carriage inwards. To bring it to your place, you have to incur some carriage inward, or some small changes you have to carry over there in a small factory or workshop. Factory related costs, all these things will come in trading account. Thereafter, for running the showroom and office, all these expenses, admin expenses, and promotion expenses, advertisement, all, and not related to this, we still have so many other income and expenses will come under profit and loss. Is it okay? So here raw material and carriage in, raw material and carriage in, these two raw material is nothing but probably this one furniture or simply material purchased, and to come the to bring the furniture to your showroom you need to of course incur the carriage and insurance whatever it may be. Being a farming part of the value will come in the trading account. Thereafter, admin and selling will be there. That will come only the P&L account. So I am going to block this. Material cost and the carriage in will be a first part. Thereafter, it will come as a second part. The first part is named as trading account. The second part is named as profit and loss. First part is trading account. The second part is profit and loss account. Is it clear? I hope so. Good to understand this one. The first part is trading, second part is profit and loss account. What are the items will come? I will give the examples of items coming in the trading and P&L account in the subsequent classes. But in this class, I am not dumping you to mug up anything. But I made you understand the concept behind the preparation of the trading and profit and loss account as well as the balance sheet, right? In simple sense. Usually, I don't allow you to mug up. I want you to understand the logic here up to the point that the asset or whatever the saleable items brought to your place will be a forming part of the cost to be debited in the trading account. Thereafter, for whatever the purposes may be administration, selling and distribution purposes and all other related to the business, non-related to the business items will come in the next block called profit and loss account. Come on. By tallying this, how much balance you are getting for the first block? Come on, tell me. If you tally the first block, okay, how much is the balance? Come on. So this is 7,000, yes or no? 7,000 in the credit side. I am going to tally the first part. By tallying the first part, what is the balance? Come on, message me. Yes. That 3,000 is named as gross profit. If the balance comes in the opposite side, then it is called gross loss. The balance carried down will be posted in the next side as balance brought down. The same way, the gross profit, what you found out by preparing the trading account will be transferable to the credit side of the next block will be named as profit and loss account. But usually we don't name it separately. Trading account separate, profit and loss account separate. Such a way, we usually don't name it. We name it collectively as a trading and profit and loss account. But while recording, we record first block separately and second block separately. The balance of the first block is either GP or GL. Most probably there will be GP only, gross profit only. The gross profit will be transferable to the credit side of the profit and loss account. By tallying this, you will be getting the same net profit. Is it okay? The second block is tallied, you will get the balance which is equal to the same net profit. This net profit will be addable with the owner's fund. Owner's fund. Is it clear? Now, a comprehensive account will look like this one. Let's see here. I'll just brief you here. Okay. Now, here a model of final accounts. A model of final accounts. Okay. The model of final accounts. First of all, we have trading and profit and loss account. Profit and loss account. Commonly. Then we have the second block called balance sheet. Balance sheet. Okay. This is the format. I already explained what are the things will come here. Trading and P&L, those things are account, but balance sheet is not an account. It's a summary. It's a summary. Is it okay? Balance sheet is not an account. Clear? Trading and P&L account. Now, in trading account, in balance sheet, the left hand side is named as liabilities. Right hand side is nothing but assets. In liability side, we have capital, usually net profit will be addable. In the case of net loss is subtracted, and we have loan and creditors, etc. etc. In the asset side, usually we'll start with this way: land and building. This is the predominant asset for every business they will have, right? And plant and machinery, plant and machinery. Okay. I'll just give a small list now. On subsequent classes, we'll deal in detail. And then we have investment and stock and debtors and cash and bank, whatever it may be. These things will come into balance sheet. In trading account, the first block, here we don't usually record this way. This is not the customary practice. The raw material consumption will be recorded this way. We'll start with opening stock. Opening stock. Opening stock value being 1000. Here it's not raw material consumption. It's raw material purchases or simply purchases. Purchases. So the purchases here is 5000. So 1000 opening stock with that purchases 5000 is added, and you have to subtract the closing stock that will be recorded on the credit side. Closing stock. This is the customary practice. So now these three items, opening stock plus purchases minus closing stock, will be the 3000 rupees what we have already posted. That's the format. See, actually only 3000 is the expenses debited to the trading account, but the customary practice says so that opening stock is debited and purchase is debited, because these two are going to be summed up, and from these two value I am going to subtract the closing stock. I am going to post that value the opposite side. So closing stock. Is it clear? I think so. You will understand now. Now here I am going to put the values here: opening stock and purchases and carriage in and wages, fuel, oil, etc. related to the factory costs, factory expenses. These things will come here, right? In credit side, what we'll have is very simple. In credit side, usually we'll have the sales. Apart from that, closing stock. By tallying the first block, the balance will be gross profit. The balance will be the gross profit. Here, gross profit. Okay, this is the balancing figure. The gross profit what you arrive can be transferred to the next block, which is called profit and loss account, right? So gross profit. This is how we have the small format here. And in the second block, what are the items will come? Let me again brief, but the entire thing will be discussed in the subsequent classes, not now. So what are the other items will come here? Let's see here. Office related expenses. You may have rent, salary, advertisement and electricity, etc. So many things we have, and interest paid, whatever it may be. Finally, if you tally this, the final answer will be net profit here. Is it okay? The net profit what you get here will be transferable to the capital account. This is the end result. of the business organized in this year, right? And finally, if you prepare the balance sheet, it should get tallied. Otherwise, you might have made some error anyway. You have to correct that error, right? So it will be equal. Clear? Okay, then almost majority concepts or fundamental format is over. Subsequently, I will go with the adjustments to be carried